Well, Mandhana Industries is the company that we're going to be speaking to. Mitesh Shah, the Vice President Finance of the company, is joining in on this leg of the show. 2% up on the stock. Mitesh, morning. Good to have you on the show. How's business been over the last one quarter or so? What kind of growth rates have you seen on balance?
Business has been very good. Quarter on quarter, year on year for June, first quarter ended June, we have managed a growth of around 37%. The revenues have grown to 144 crores as against 105 odd crores last year. Likewise, the margins have also expanded. We have registered a bottom line of 12.75 crores as against 8.5 crores last year. So the company has been keeping pace with the textile sector growth.
Are you expecting to maintain these growth rates?
Absolutely, yeah. Year end FY 2011, we are totally looking at a top line of around 775 to 800 crores, which is like around 25% growth over the last year. Last year revenue of 625 crores.
And this would be on a PAT of how much?
This would be on a PAT of around 70 odd crores.
And an EBITDA margin of?
EBITDA margin of, the blended EBITDA margin should stand at around 21.5%.
Okay. Is that slightly lower than what you did in the first quarter?
Not really.
Roughly in line?
Roughly in line with the overall margins.
Is that because there are some significant pressures on the cost side? Cotton prices have gone up about 15-20%?
Well, there are. Cotton prices have gone up like anything. Prices of cotton per candy have gone up from 22,000 to 38,000 approximately. Fortunately, being a vertical integrated player, we are present across the value chain from yarn till final garment. And we store a good amount of inventory of yarn also. That has been keeping us afloat in the rising cost scenario also.
What is the current inventory level of the company?
Current inventory level of the company are about 3.5 to 4 months of inventory.
Okay. And do you feel the need to raise prices of products to counter these increase in cotton prices?
Well, we have already raised the prices over a period of last 9 months to 12 months.
On balance, how much?
This has become, I'm sorry?
On balance, how much would you have raised prices by?
We have raised the prices by about 25 to 30% on our fabrics. And likewise in our garments also, we have been able to pass on the rise in cost.
So you're moving largely in line with the raw material prices?
That's right. Yeah, this being a universal scenario, one has to accept the rise in price. So even the buyers are aware of this nowadays.
Is there any way to hedge against the rise in input costs? Or not really?
Not really. It has been like uniform. We have been buying at all the prices and just trying to average it out.
How much are you exporting of your total top line that you do of 800 crores? How much do you get via export?
Well, as per FY10 numbers, 20% have been exports. Balance 80% have been domestic sales.
So you'll do about 160 crores of exports this year also?
Yes, we are looking to register exports of around 160 to 170 crores for the current financial year.
So how are you dealing with the currency? The way it's moved 3-4% in one quarter with these FI
well, that's right. Rupee appreciation has been of some concern. Fortunately for Mandhana, for us, about 60% of the exports are denominated in euro currency. And euro is also appreciating against the dollar, so that has been kind of providing us with some hedge. And being exporter, we also avail working capital loans in foreign currency. So there is a natural hedge in that sense also.
Are you adding
Apart from that, we follow a very systematic hedging process also.
Sure. Are you adding any capacities for the remainder of this year?
We are adding capacities in a big way. We are expanding our garment capacities from existing 3.6 million to 8.3 million pieces. This was one of the objects of the issue. We are installing one garment unit at Tarapur with an additional capacity of around 4.5 million pieces, which should be operational by the end of the last quarter of the current financial year.
So you'll be 8.3 million by when?
By March 2011.
Okay, so the bulk of your revenues will come in through this capex.
That's right.
Good speaking with you. Thanks so much for taking time on
Thanks, Rahul. Thank you very much.
Okay, we've completely run out of time on the show as well then. We're leaving the Nifty, as you can see there. Well, it's moved back into the positive by 2 points. What do you know? So not such a bad morning of trade after all. It's been very volatile. Symptomatic of F&O expiry in more ways than one, but it's managing to hold. Even for the Sensex, as you can see, there is a clawback perhaps from the day's low. If we can just pull that up for you as well. That is the Sensex, up by about 7 points. On behalf of my entire team, thank you so much for watching. We're going to continue the news flow on the other side. Stay tuned.